Welcome to Trillium Plain Talk. I'm Steve Laska, managing partner here at Trillium Wealth. And I'm here with my partner, Matt Gomoll, who also operates as our chief investment officer. And Matt, I think today we're going to start off with a little housekeeping. We had the SpaceX IPO that we talked about last week. And as I watched it, I went from watching people think I'm rich. No, I'm super rich. No, I'm really, really super rich. But okay, now I'm not quite as rich. So tell us a little bit about what happened with the IPO and just where we see it going from here.
Yeah. So last week, or last episode, we really were trying to talk about the mechanics of this, just because this is such a different thing. Massive size company IPOing, the early inclusion in indexes that still hasn't happened as of right now, but it will happen over the coming weeks. And so it was just kind of a groundbreaking thing that felt like it was all over the news, and we wanted to talk about it and kind of give everybody the perspective of what this meant. Well, it was not a normal roadshow. Elon Musk priced it at $135 a share and just told everybody that's what it is, which normally during a roadshow, you discover what somebody's willing to pay. And he just told everybody he can do that. He's Elon Musk. When it finally started trading on that Friday, it was in the low 150 range. That's where trading began. Went up from there over the next couple of days, went as high as $225 at its peak. And now it's back down to like 153 as of this recording. So funny tweet that I saw on its way up, it surged by an entire Meta, right? The Facebook company, the market cap of Facebook, on the way up, and on the way down, at least as of that, which was like probably 2 days ago, so it might be lower now, it had wiped out a literal Netflix worth of value. So that's just how these things goes, right? When you have a more than $2 trillion valued company, moves to the upside or downside mean real dollars, like a lot of dollars. This really, as we kind of said on the last pod, has been a story of just supply and demand. They did not issue very many shares. It was like around 4% of the shares that were available for float for trading. The rest of them are locked up. I think Elon, I can't remember if he owns, I don't remember if it was 40 or 60%. He owns a huge amount of the company. He's never selling. So there's just automatically a lot of shares that aren't going to be traded because of Elon. Of those that are private investors, people, venture capital investors, people who were already in it in the private markets for maybe a decade or more, plus all the employees of the company, they have these vesting schedules, these lockup schedules rather, of when they're allowed to sell. And then the indexes inclusion of the NASDAQ and the Russell and the CRSP are having their inclusion dates. So those two things are kind of going to be meeting. You're going to have more shares become available for sale. You're going to have more shares being purchased by indexes. And there might be some stability in that. Right now, what we're seeing is the market's kind of, once the market gets a hold of it, it gets to price it however it wants. Early was a real big run up, and now it's priced back in the 150s.
I think, as usual, Elon cuts, new territory and validates some things that, continue to give him a tremendous amount of power and influence. And this is a good example. Like, he went out with a price that even after, all of that kind of noise and excitement settled in at a good bit higher than what he went out with. So he's validated his bona fides on value, and he does own an enormous shares. And I think what I take from that is, I don't know whether he would do it or not, but he has enough to remain in control of that business and like raise $200 billion really fast. Like, he could raise the net worth of the second richest person in the world pretty quickly, because I definitely think it was proven out that there is a market to buy SpaceX, right? And I think if you put another 200 billion in there, I think people would gobble it up. They'd buy it. I don't think it's one of those things like, if you put it out there, it's like, oh no, now we're going to get to a true valuation. This thing's going to be at 90. I think it's sell it at 150 and get it.
Yeah. I just looked it up. He's in the mid 40s on equity control, but the way he's structured it, he has a lot of voting control, right? So he has like 85% voting shares. That was an issue that came up with some institutional investors feeling like, hey, we're buying a share of this, but we don't get one vote. and so there's absolutely that side of things where investors feel like I have a share, I should have one vote. Elon's counter to that is, I have the long-term interest of this company. I have a long-term vision. I do not want to be distracted by the day-to-day price, moves in the market and what our quarterly earnings are this month versus, a few months from now. That drives normal stock prices. He wants to say, hey, I'm dead set on targeting this vision and executing, and you're either along for the ride or not, right? So that's, to some people might be a detriment, and to others is actually a feature, right? They're saying, great, he's in charge, he knows where we're going, and I'm on board.
Yeah, and what makes this different, and I think there's a handful, but not very many companies that could do this. But Elon knows he doesn't need institutional investors, and most times you do. Most times you need to go
Yeah.
out and say, "Well, I have to keep them happy. I have to give them their voting privileges," and they have consultants coming in and saying, "You need this, you need that." And it's a negotiation. I think he sits there and goes, "I'm already going to be in the indexes. Number one, I'm a popular name. It's a popular brand. It would be like, launching Coca-Cola or McDonald's and saying I need institutional investors when there's hundreds of millions of investors. They'd be like, nope, I'll take my share. So it's pretty incredible. And we won't spend a lot of time on it. I might have said it last time. I'm pretty convinced that, he will just buy Tesla all the way out pretty soon. And because he doesn't like the board there, he doesn't like that they get in his way. And he'll continue to power forward. So, uh, glad we could clear that up, or at least give some light. And we'll always keep an eye on it for our clients. But let's pivot a little bit. And I want to talk about a couple of different things administration wise, right? And one you might touch on a little bit, but the other I want to touch on a little bit more. So we now have a new Fed chairman in place, right? And we know certain commentaries coming from there. The Secretary of Treasury has been speaking recently again about what some of our powers are as a country and what we should do. I have a very strong feeling that, unlike the past, they will do something that I think they should do, even with Fed independence. I think the Fed should collaborate with whatever administration's in there to fulfill their needs. But we have a president right now who is so strong on lowering interest rates that he gave a different excuse, but he basically put a bullet in this in this affordable housing bill that was bipartisan, and just said interest rates will take care of that. Like, that's what he wants his narrative to be. However, even with Warsh in charge, people are learning what you and I've been saying for the last couple of years on these things, right? Like, he's not a dictator. Kevin Warsh doesn't get to go in and say, I'm lowering interest rates. In fact, it's not a majority yet, but a pretty sizable amount of Fed governors are intimating they might need to raise rates at this point. What say you, Matt?
Yeah, it is. And so, for the last several months, there was definitely talk of Trump's going to appoint whoever he was going to appoint. Turned out to be Warsh. He's going to have a mandate to lower rates. Like, that is job description number one. Get in there, lower rates, because I want lower rates. Well, he knows, Warsh knows that he cannot do that by himself. Right. He has to wait for the data to be right and to get other people on board, because it's not a what I say goes. He actually came out and was very. So there were a couple new things he's saying in his speech after the meeting. One, he's firmly stated, we will deliver price stability, right? So he is tackling inflation, and whether that means they're going to raise rates because he says that, or just he's being tough on inflation, right?
Right.
Saying that's part of our dual mandate, that and full employment. So employment, not an issue right now. Inflation, uncomfortably high. Like, it's still in the 3, low 4. Like, it's not getting into the 2 range. And so he's saying that's what we're here to tackle. Left rates unchanged. And now he's kind of doing some stuff where he's trying to intentionally give less guidance, right? The dot plot exists. That is, each Fed governor can put a dot on a chart to say, like, this is where I think rates will be at this point in time and this point in time. And he didn't put one on there. And he's doing some stuff to say, I think we need to relook how we're communicating. Maybe we need to communicate less. Maybe instead of the market hanging on every word, we need to go reevaluate our data. He also wants to, he's like launching task forces to look at how the Fed communicates, how they measure things, trying to get more and better current data. So it's pretty interesting, right? It'll be interesting to see what he does with all that. But yeah, there is an indication that like inflation isn't dead. Even some of the banks are coming out saying, well, we thought there were going to be some rate cuts this year. Now we think there might be 1, 2, 3 rate hikes. I don't know if it'll go that far because I think he's going to, really try to not have a rate hike. But that just shows the, how dynamic this inflation problem is, going from, hey, I think we're all in the clear and we're on our path to keep cutting, to ooh, it's stuck around. Part of that's probably the Iran war, and after effects that we're going to keep feeling for months. But we'll see where that goes. It's not great for, to the president's point of rate cuts will solve housing. Well, it's not great for that, because I don't think interest rates are going to go down that much, and I don't think mortgage rates are going to firmly go into the fives where we want them.
Yeah, I don't think there's going to be rate increases. I think there's a little bit of posturing, and like you said, there's messaging. As I told you, I sat in a room with a small number of people and a Fed governor, and they basically admitted, like, I think Greenspan started this. God rest his soul. We lost one of the great money people last week, but they trade in rumor a little bit, and it's how they temper things, and it's how they keep things a certain way. Um, that said, if you can get away from the political noise and what TV you're watching, there's certain logic. So the Iran war had a dramatic effect on short-term inflation. Like, everybody's like, well, if you take the gas prices out, then there's really not that much inflation. If only that were true, right? Because gas prices affect so many things. It affects the price of airline tickets, what business you're going to go out there and do. It affects the price of food. I remember in the 2008 2009 time frame, a friend of mine was the CEO of a company that owned a lot of diners in Florida, the Village Inn diners, a bunch of them. Right, he didn't own all, but owned a bunch of them. And at that time, same things were happening with gas prices. And he said, Steve, he said, we had to go to paper menus because we were reprinting our menus weekly because gas prices were affecting food prices so much. He's like, and it's a diners are low margin businesses. He's like, when you're selling a breakfast for $2.75, and all of a sudden thing goes up, you got to charge a quarter more. $3 is the difference between profit and broke. And so, like, if the Iran deal holds, right, and if that stays in place, we've already seen the dramatic decrease in oil, and gas prices will come down. And I think before the end of the year, we will get to a point where the inflation will be tempered enough for Warsh and other Fed governors to kind of influence that, to say, look, it's okay for them to come down. As I've said many times, like, when I was your age, 4% inflation was more than acceptable. It was the norm, right? It was like, that's okay. We're now saying that's not okay, right?
Mm-hmm.
And I think part of it is because during that time, everything went up. Whereas in society now, some things come down when others go up. Like again, if I go back then, my cell phone bill was $1,100 a month, right? Everybody pays $50 a month or whatever it is now, right? A TV, like, I can go to Walmart right now and buy a 75-inch TV for like $350, right? And so things are coming down while others are going up, and I think that's the adjustment that is potentially being made. So juxtapose that with another person in the administration, and this is where I think like I said, they should collaborate. I believe when you and I were discussing this recently, part of what Bessent came out, and I think this is his side of it when you get away from all the political noise. The best way he thinks right now to grow our economy and make it stronger is to leverage the fact that we already have the biggest, strongest economy. Like, he's literally saying we should really be leveraging that. We shouldn't be sitting here on our laurels going, we have the biggest, strongest economy. He thinks that we should be going out and pointing out that whether you like all the time, all the things that we do, we're still the most investable country in the world. We're still the most voracious appetite to buy things. And, you should be investing in the U.S. economy in the U.S.
Yeah. And the first of those, I'll tie that directly to inflation. So manufacturing, we went to a world of the most efficient manufacturing and supply chains, and we realized that was a risk. And so since COVID, we realized that was a risk. Even before that, the Trump administration and the first go round was trying to build stuff here, I guess. So that's been a theme for about almost 10 years now. And it costs a lot of money and it makes things less efficient. And we're going to be inefficient on purpose, and that's inflationary, right? If there's not just one factory in Southeast Asia that builds these things, instead we have two factories in the US that also do it, and maybe one in Mexico and maybe one in Europe, because we need that supply chain security. It's just going to be more expensive. But he has made a point to say, and the administration has, like, we absolutely need, there are certain things, defense, semiconductors, pharmaceuticals, AI infrastructure, that's the future, and we need more of it built here or where we feel secure about it. And that's going to be inflationary, just because it's less efficient, it's more investment, more redundancy, but it's ultimately healthy for us, right? It's we kind of need to realize that the globalization that started in the 90s and kept going through the 2010s was artificial. Like, things were artificially cheap because we didn't realize the security cost embedded in that cheapness. And so part of what he's saying is we're going to move away from that. Another part of what he's saying is we do have dollar dominance today, and he recognizes that and wants to harness it, right? And so, he made comments about BRICS. That's the kind of conglomeration of non-US aligned countries who are trying to make a replacement for the dollar with their own trading system. Has gone nowhere. Those countries realize that they don't really have alignment on their interests, and so it's not going to work. But the dollar, while it's been weaponized in ways that I don't think have been great for us, he actually sees a surge in demand for US dollars. And we talked about this before with stablecoins. He's like, if this stuff gets out there and people in Africa and South America and Asia are using stable coins to buy and sell things because it's just easy and it's instant, well, those, a lot of those stable coins are backed by US dollars. There's our dollar demand, and there's us, the US still being in a lead place. I think the other area that there's any government needs to figure out is, what do we do with AI? And the administration is trying to guide, I would say, the AI industry without putting too much restraint on it. If we could juxtapose that with how Europe functions, Europe has just a ton of internet regulations and all these privacy things. And so they have a lot of formal laws they've passed that make it very restrictive for companies to operate over there. And so, that's a model, and doing nothing is also a model, like zero regulation. And on AI, we're in a weird place where we want our companies to be at the forefront. We want our companies to be leading the way instead of somebody like China leading the way. But at the same time, they're creating some stuff that's kind of dangerous. And we just saw this with Claude Mythos being introduced, and then they had to put restrictions on it. And then they ultimately, Anthropic just pulled it from the market because the US said you can't let foreigners use this. And they couldn't figure out how to do that without just pulling it. And it had to do with there were some ways to jailbreak the guardrails they put in place. And it is very powerful. And so it's an interesting period we're in, but what I'm kind of getting back to, Bessent sees that we need to have leadership on these topics of reindustrialization, of dollar dominance, of AI leadership. But it's hard, it's challenging to figure out the right thing to do as especially the AI industry is moving so quickly.
Yeah, I remain optimistic about AI, and again, I'm on record of saying I do think it is something that needs to be regulated at some level. And some of the stuff that you're mentioning there, like that's there's dangers at the highest levels. I think what people are finding if they use it like I do, and I think maybe you do, and certainly our company is right now, is like it's not as free as people think. It's like you keep putting coins in the machine, right? And there's stuff that needs to be done with. I think you mentioned last time the amount that employees at Facebook or one of those places, like the the bill got bigger than they expected on just using it kind of willy nilly. But there's two things to unpack that I'd like to unpack that you just said. So, first of all, that going back to when I was a little bit younger, one of the reasons why like inflation was a little bit more acceptable at the 4% level was the salaries were increasing. Like it was a time where middle class was growing, like your job was growing, and your income was outgrowing inflation. Sometimes the dangers of very low inflation can be that it doesn't really have a great effect on people either because they're stagnant and they're not growing. And it's not the American way to wake up and say, this is my life for the rest of my life. Certainly not until you're retired. Like we're not a society that was built on 35-year-olds waking up and going, okay, I'm done. This is what I'll have. Like I'll make exactly this amount of more so I can afford the same amount of stuff. So
Yeah.
when Bessent talks about those things and coming in here and doing that, part of his thesis is it might be it is inflationary, like you're saying, but if growth and productivity for our citizens is outpacing cost growth, then it's no longer a problem. If inflation was 4%, but wages were going up 10, well, nobody really cares, right? If inflation's 4% and wages are going up 2 or 3, and that's been a struggle, I think, for the last couple of decades at different levels. And so I think that's one part of it. And the way that I'm optimistic about AI is that, as I've said before, like countries are not, including ours, are not keeping up on birth rate. And so candidly, we need to be more productive in order for our economy to grow.
Mm-hmm.
And I think there's part of it that we actually need to look and say something like artificial intelligence. And I look at how I use it on a daily basis, Matt, and it is, to be honest with you, like it's not, you're my business partner. You haven't gotten a call from me going, "Hey, Matt, this is so great, man. We can get rid of some people now." Right? I mean, we need all the people we still have. But what it is doing for me is I am more productive, and it's doing work that I used to procrastinate on, and it's making the quality of my work, quite frankly, better. Right? It's making the quality of my work better, faster, and it's a place where as we get our team to use it more, we can create a better life for everybody. And so when I look at AI and where it's going, and I know we digressed a little bit here, but all these things are tying together. What does it mean for productivity? What does it mean for growth? What effect will it have on inflation? I think if these things are managed properly, then we're in a good spot. And the other stuff you're bringing up, like I have no doubt, like there's some dangers to the wrong people getting in their hands. I still, when I talk to people every day, say that look, the most powerful people in the world know that if AI did everything for everybody, like this country was built on a revolution where a small number of people controlled, not like people think now, a small number of people controlled the wealth, but I mean like really controlled wealth and power. That's what would happen. Like if you could harness AI and do everything, you'd be the loneliest person in the world, not the richest person in the world. And
Mm-hmm.
it would not be a good place to live. And so I am still optimistic about those things. And I think that that's where, like, I get back to Secretary Bessent, and I do believe that that's where his thoughts are. Invest here, invest in our technology. And there's a lot of things unsaid, like when we're doing things here with AI, and like Anthropic's pulling back from other places. There's a little unspoken message, like, hey, maybe that's another reason why you want to invest here in America. Like we have these tools, and we have, if we can put the right regulations around it, they're very usable. And if we can produce things better here and more efficiently, we've been the leader in the world in, at probably not as long as people think. I mean, we became a true superpower in World War II. We weren't a superpower in the 1800s or the 1700s. We were a baby. It was after World War II, which is less than 100 years ago, that the U.S. became a true superpower that had influence on everything in the world, and that's, I think, continued to grow.
Yeah, and one point you made, it is true that your wages may go up and inflation may go up, and those things cancel each other out. But I heard somebody talking about this recently, and it was so insightful. Wage increases feel like something we've earned, right? Your wages go up 3%. You feel like, hey, I'm done a good job. I'm here longer. I'm contributing, and so I earned a wage increase. And then 3% inflation that eats that up feels like you just took that from me. Like I just earned something and you just took it away. And so that is what people hate, even if their wages are keeping up with inflation and their standard of living isn't changing. It's also not growing. Like you said, people want their standard of living to grow as their wages grow. But if all it is like, hey, you earned this today and adjusted for inflation, that's all you're ever going to earn because it's all going to get eaten up by inflation. People hate that.
That's
and
right.
So, yeah, that is the disparity that people like we need to fix. And that's why, 4% inflation isn't in the end of the world. But when it's matched with only 4% wage increase, it leaves people feeling really bad about it.
Or no wage increase.
Yeah.
Right? And that's what's worse, because I think you see a lot of companies out there when they face inflation, if they get behind the power curve, they're having people work and going, well, I'm not going to be able to give them a raise because I got caught a little bit off guard by this inflation. I'm not going to be able to get them a bonus because I don't have the same money at the end of the year. So, and again, I don't know that it's uniquely American, but we're probably the biggest ones on. I mean, the country is built on most people. The American dream is I get up every day and if I work hard, I will move forward. I will not tread water. We're built on that. Right. And so we're for our country, we definitely need that. Well, Matt, I have some ideas on things I want to talk about in the near future. Right. So in the near future, and I'd like to get some guests in here. I don't know how quickly I'll be able to pull it off, but some things I want to be able to put out there for our clients is one, we do have entrepreneurial clients, right? And so I have a guest I'm thinking about bringing on that will talk a little bit about what is it like to be an entrepreneur in today's environment. Like you and I have some ideas around that, but I'd like to get some other voices on it. And at some point in the very near future, I'm reaching out to some people that I want to talk a little bit about alternative energy and not as a replacement as much as an augmentation. Like you and I just talked about AI, and we've said on numerous podcasts already, uh, it's an energy suck. Like it doesn't matter how much, like for the amount of energy it takes, we're going to need energy from all sources, like everything we're going to need energy from. Otherwise, this stuff won't work anyways. So those are some of the things I'm looking at in the future. Any topics on your mind, or are you in line with those as well?
Yeah, those sound good. And like we were talking about earlier, if the Iran war ever wraps up, maybe we'll
Yeah. I do
put a
want to
period
get.
on that thing.
Yeah, my reticence to talk about it too much is that it seems like when we talk about it, I think we have great insights, and then something happens where it's like, well, that changed those
Yeah,
insights, right? And
irrelevant
so,
if hour
yeah,
later.
until it's over, or at least closer to over, and I do believe, that it's in the right direction. I think that everybody, has kind of said we all need to move on a little bit. And that's a topic for another day. Anyways, thanks, Matt. For everybody out there, we'd love you to subscribe to the channel, share it with other folks, reach out to us as well, and any of your advisors, or if you're just visiting us and you're not a current client, reach out to our firm if you have a topic that you want to hear about. And again, click and subscribe. So thanks, Matt. We'll see you guys soon.